friends, and welcome to this episode of Money on Your Mind, a segment where we answer your questions that you have submitted around money. Today's question is, should I have an investment account or should I have an insurance policy? Well, my answer is going to be rather broad. And as you can assume, I'm going to tell you that it might be very personal to you. So without knowing your full financial picture, I can't specifically answer which one. However, here are some things that you should consider. Yes, you should probably consider having both. However, with an insurance policy, do you have the ability to be able to have cheaper insurance through your employer? Many employers offer base plans of insurance through your employer benefits. However, is there a greater need that you're wanting for insurance to protect your family? And if so, what type of protection are you looking at? Are you looking to avoid risk associated with a early passing of yourself? Are you looking for long-term care? Are you looking for a disability policy? All of these policies have different purposes in our financial lives. So you need to assess what the purpose of the policy is first. If you are looking to replace income for you or your partner in case you were to prematurely pass away from your planning, I think it's important for you to understand the different types of insurance policies that are out there as well. You can have term insurance policies where the premiums are usually more affordable, but the catch is that policy is only available for a period of time. Many times there are a lot of individuals out there in the insurance world, not trying to rap on the insurance industry, but they will try to sell you a policy that is a whole life policy or a variable or a universal life policy. And all of these policies are wonderful when used in the right area. So again, going back to the purpose and understanding and education behind that policy. My answer truly is you should have both. And in investments, I talk about the 3 different buckets that you should have from an investment standpoint. You should be saving into a tax deferred, like your 401k, making sure that you are at minimum appreciating any match your employer has to offer you, saving into tax-free, especially while you are younger and your income might be lower, because that isn't an option for direct contributions to Roth IRAs as your income increases. And taxable, saving into an investment vehicle that isn't retirement is absolutely possible. And even if it's in small increments, there are lots of different avenues out there and different trading platforms that you can use to start creating that portfolio, even with just a couple of dollars. So don't think that you have to be this grandiose rich person to start creating wealth. The reality is, before doing any of this, you want to understand what you're able to afford from a premium perspective, if it's an insurance policy, or what you are able to save and invest in, and understand that in investing, you will be susceptible to risk. So this is not something that is your emergency fund money. You want to make sure that you have your emergency fund before you proceed in any other additional investing or insurance policies. If you have any further questions or perhaps want to sit down and have a greater conversation on how this applies to your own personal situation, well, go to forethoughtplanning.com/wealth assessment today and schedule your time with us. Otherwise, if you have a question you would like to submit, we would love to hear from you. You can go to forethoughtplanning.com to resources and then Money on Your Mind and submit your question there. All right. Now remember, you are worthy of wealth.